How to trade Forex fundamental news, FOMC. The Federal Reserve is the most important central bank in the world because of the special role the US dollar plays as a reserve currency. Therefore, traders always pay close attention to the bank's meetings and activities. The Federal Open Market Committee, the FOMC, is one of the most important items in the economic calendar. Economic data tends to be one of the most important catalysts for short-term movements in the Forex market. Since the dollar is one side of many currency pairs, US economic releases tend to have the most pronounced impact. News makes great effects on trading, especially when the news is about US dollars. The Federal Open Market Committee, the FOMC, decision on interest rates is one of the most powerful market movers in the Forex market. And when the markets move, traders trading the news have the opportunity to make money. Fundamental news is just as important in the modern trading world as technical analysis. Trading on news releases can destruct and strengthen their trading strategy by adding economic announcements to their purely technical and charting approach. There are two major types of fundamental Forex trading news: directional bias, non-directional bias. Directional bias. It means that you expect the market to move in a certain direction once the news report is released. When looking for a trade opportunity in a certain direction, it is good to know what it is about news reports that will cause the market to move. With a consensus at 9.0%, it means that all the big market players are anticipating a weaker US economy and, as a result, a weaker dollar. So, with this anticipation, big market players aren't going to wait until the report's actually released to start acting on taking a position. They'll go ahead and start selling off their dollars for other currencies before the actual number is released. Now let's say that the actual unemployment rate is released and, as expected, it reports 9.0%. Non-directional bias. A more common news trading strategy is the non-directional bias approach. This method disregards a directional bias and simply plays on the fact that a big news report will create a big move. It doesn't matter which way the Forex market moves, we just want to be there when it does. What this means is that once the market moves in either direction, you have a plan in place to enter that trade. You don't have any bias as to whether the price will go up or down, hence the name non-directional bias. How to read news for trading. In order to read news events, you should familiarize yourself with economic indicators, which are macroeconomic factors that have an impact on all financial markets, whether it be Forex, shares or indices. These can include changes to interest rates, inflation, unemployment levels, or retail income for a specific country. And these all have a significant effect on the financial markets and overall state of the economy.